Hi, I'm Money Mike. I teach personal finance stuff the way it should have been taught in school. Today we're talking about your credit score. That little number silently judging your life choices like it's your ex with a clipboard. So what is it? It's a 3-digit number that tells banks how likely you are to pay them back. Basically, it's your financial reputation. In the bank's eyes, the higher your score, the less risky it is to lend you money. Through a credit card, a personal loan, a car loan, a mortgage, whatever. The lower your score, the more risky you seem, which means higher interest rates, stricter terms, or straight up getting denied. Now here's how it works. Your credit score is calculated by companies called credit bureaus, mainly Equifax, Experian, and TransUnion. They collect your financial info, run it through a formula, and boom, that number pops out. Now what info do they look at to come up with your score? A few different ones. Number 1, payment history. Did you pay your bills on time? Or did you forget it existed until the late fee gave you a jump scare? Number 2, credit utilization. That's how much of your credit you're using. If your limit is $1,000 and you've spent $9.99 on Taco Bell and candles, your score is going to take a hit. Number 3, credit age. The longer you've had credit, the better. So no, opening 5 credit cards this week won't help. Number 4, credit mix. That just means having different types of credit, like a credit card, a car loan, maybe a mortgage. If all you have is a Banana Republic card from 2018, let's just say it's not helping much. The age is, but the lack of variety isn't. Number 5, hard inquiries. Every time you apply for a new credit line, your score drops a little. So if you applied for 3 cards this week and a furniture loan because the couch was too soft to resist, yeah, it's showing up. Now, why should you care? Because your credit score follows you everywhere. You want a car, a house, even a new phone plan? Your score's getting invited to all of it. You're just tagging along. So how do you improve it? Pay your bills on time. Not close enough. On time. Keep your balances low. Just because you can swipe doesn't mean you should. Don't open random credit cards just because they offer you a free tote bag. And don't close your oldest card unless it's haunted. That age helps your score. At the end of the day, your credit score isn't your value as a human, but it is the difference between getting approved and getting laughed at by a loan officer named Karen. So take care of it, check it regularly, and for the love of financial peace, don't max out your card for concert tickets. See you next time.